Hello and welcome. This is the GEOVISTA, and I'm your host, Jina Kim. The cryptocurrency market is buzzing once again, with US President-elect Donald Trump pledging to actively utilize digital assets. Investor optimism is on the rise. Cryptocurrencies become the new standard for currency? Or will this be yet another speculative frenzy? Today, the GEOVISTA takes you into the world of virtual currencies.
Laying out my plan to ensure that the United States will be the crypto capital of the planet and the Bitcoin superpower of the world, and we'll get it done.
President-elect Donald Trump was busy criticizing cryptocurrencies as recently as 2021, but he completely reversed his stance ahead of his presidential election. He unveiled plans to stockpile Bitcoin as a strategic asset similar to crude oil. And the Republican Party introduced a bill proposing the accumulation of 1 million Bitcoins by the government. Adding to the optimism is Tesla CEO Elon Musk, a prominent supporter of President-elect Trump's campaign and a vocal advocate for cryptocurrency. Meanwhile, countries that adopted crypto-friendly policies early on at the government level are already reaping significant benefits. One notable example is El Salvador.
It's going to be right there in the second goal, and it's going to include everything: residential areas, commercial areas, services, museums, entertainment, bars, restaurants, airport, port, rail, everything devoted to Bitcoin.
The small Central American nation of El Salvador made global headlines in September 2021, when it became the first country in the world to adopt Bitcoin as legal tender. Initially, the policy faced strong opposition from the World Bank and the IMF, but President Nayib Bukele pushed forward with his plans. He maintained a buy-the-dip strategy, purchasing 1 Bitcoin daily, and actively promoted Bitcoin mining using geothermal energy, issuing Bitcoin bonds, and fostering cryptocurrency trading. The government even allocated state funds to build its Bitcoin holdings. El Salvador now holds approximately 5,930.7 Bitcoins, forming what is called the country's strategic Bitcoin reserve. 3 years later, the results speak for themselves. On November 11th, following President-elect Trump's victory, El Salvador Bitcoin office announced that the strategic Bitcoin reserve had increased the value of the country's legal tender by nearly $25 million in just 24 hours. They stated first moves win. Another compelling case is Bhutan, a small Himalayan kingdom. Bhutan has reportedly amassed significant profits through government-led Bitcoin accumulation, holding an estimated 13,000 Bitcoins. Bhutan's pivot toward Bitcoin was driven by the COVID-19 pandemic, which severely impacted its primary revenue source, tourism. Seeking alternatives, the country turned to Bitcoin mining, capitalizing on its cold, high-altitude climate and abundant hydropower resources. Even without direct government involvement, the global adoption of cryptocurrencies continues to grow. While adoption may not always indicate full integration, even the recognition of cryptocurrencies marks meaningful progress on the path to a digital financial future. The Global Crypto Adoption Index, which measures how extensively cryptocurrencies are utilized in countries and regions, places India at the top, followed by Nigeria, Indonesia, the US, and Vietnam. This index highlights the role of cryptocurrencies in economic activity. Notably, when focusing solely on individual usage, it is significant that the emerging market of India has surpassed the US. A majority of the top 20 countries in the index are emerging markets and developing nations in Asia, Africa, and Latin America. These countries share common traits such as strict government controls on capital outflows and low national currency values. This trend highlights how cryptocurrencies are not only replacing traditional financial systems, but also serving as a tool to preserve individual asset value. These regions collectively account for 40% of the world's population, positioning them as key players in the future of the global market. This further underscores the growing importance of cryptocurrencies as a transformative force in the years to come. However, central banks worldwide would remain cautious about the growing adoption of cryptocurrencies. Their primary concern lies in the potential erosion of monetary sovereignty. Since cryptocurrencies operate independently of central bank control, they may hinder governments' ability to implement economic policies or regulate capital flows. Other concerns include the risk of money laundering, tax evasion, and capital flight. The anonymity associated with cryptocurrencies also raises the risk of their misuse for illegal activities. For instance, in 2019, a North Korean hacking group targeted South Korean cryptocurrency exchanges, stealing approximately $41 million worth of cryptocurrencies. Moreover, Bitcoin mining, which requires massive amount of electricity, has been criticized for increasing fossil fuel consumption and carbon emission, posing environmental challenges. The price volatility of cryptocurrencies continue to pose economic risks, and their long-term success remain uncertain. Nevertheless, confidence in the future value of cryptocurrencies is growing louder. Robert Kiyosaki, the renowned author of the global bestseller Rich Dad, Poor Dad, predicted on social media that Bitcoin could reach $250,000 next year, encouraging people to invest. President-elect Donald Trump has also appointed hedge fund manager Scott Bessent as Treasury Secretary and Cantor Fitzgerald CEO Howard Lutnick as Commerce Secretary. Additionally, he has nominated former SEC Commissioner Paul Atkins, known for his pro-crypto stance, to lead the next administration's Securities and Exchange Commission. This lineup is expected to form the most crypto-friendly cabinet in the U.S. history.
Bitcoin is going to the moon, as we say, it's going to the moon. I want America to be the nation that leads the way, and that's what's going to happen. So you're going to be very happy with me.
Promising to bring happiness to Americans through cryptocurrency, President-elect Trump has raised expectations for the changes his administration's policies might bring to the crypto market. Observers are closely watching how these changes could impact the global economy and the international financial system. We've looked at examples of crypto-friendly countries and even some interesting comments from well-known figures. Now let's dive into whether the next U.S. administration would actually build a Bitcoin strategic reserve and address some of the concerns and questions around cryptocurrencies. Here with us today is Professor Dmitry Shapiro, who specializes in microeconomics at Seoul National University's Department of Economics. Hello, Professor.
Hi, it's a pleasure to be here.
Yeah, thanks for being with us today. One of the critical issues that are discussed today is potential implementation of strategic asset policy based on cryptocurrency. What is the purpose of this policy? Considering the risks involved, there can be some serious concerns.
The numbers that I saw, there's something like the US would purchase, I want to say, around 1 million Bitcoins and that its current value is $100 billion. So to put it into perspective, the US gold reserve is more than five times higher. And revenue of like the US budget annual is 4 trillion. So this is like 2.5% of US revenues. So it doesn't strike me as a big deal for American government for how much money they have. Like 100 billion is not a lot. So that would give the United States like 5% control of all Bitcoins. That's, I guess, a good amount to have. And yes, Bitcoin is volatile, but given that it's such a small amount and given that its volatility is not really, correlated with many other risks. So if they stay with established cryptocurrencies like Bitcoin, I don't foresee any major risks to the US government, financial standing.
Well, certainly skeptics argue that the cryptocurrency may threaten the traditional financial system and probably threaten the dominance of the US dollars. The US government has to think about establishing a new financial system at the same time preserving the dominance of the US dollars. So how do you see the future policies that the US can pursue in this regard?
Well, that's a lot of in this question. So first of all, Bitcoin currently does one aspect of cryptocurrency, which is you can transfer it. You can, I can send you 5 Bitcoins, and these 5 Bitcoins will be sent from me to you. I cannot do it twice. I cannot do it do anything fancy with it. That's not it, because financial system is more than just sending money from one person to another or from one entity to another. For example, if a company wants to raise money, like legitimate company, so if he wants to use US dollars, it goes to America, it starts like IPO, so issuing equities, then it will be subject to all kind of laws, like it has to be transparent, it has to do disclosure, it will have to surrender some of the control to future shareholders. It has to have, this fiduciary duties to shareholders. All these laws, which are inconvenient, you don't have to deal with those laws in cryptocurrency. But what it means is that investors, you can either give crypto to somebody who, without any disclosure, or you can give somebody who did all the play by the rules. Of course, you want to give money to those companies who did play by the rules. Because of that, currently, cryptocurrency, if it wants to expand, if it wants to continue grow and reach new levels of financial infrastructure, it would have to have some laws, some regulations. And the US government, its position is very nice because, look, if the US government can say, we'll allow this certain cryptocurrency to be used for IPOs, for financing companies, investing into companies, that will be a very big deal. So that was the first thing, that there is current limitation of cryptocurrency, something that US with regulations can, jump in and address. And then there is another issue that, the US can start issuing digital dollars, the central bank digital dollars, for example. So I think it's feasible to maintain US strong position in the financial world, given that there is lots of trust to US institutions, it has great court system, it has great regulations as far as standard financial industry goes. I think there is some work needs to be done, but probably it can be done with crypto industry so that it reaches this new level. So I think it's feasible.
Okay. Then there are some developments happening in other countries like China and Russia. Following China and Russia, if more countries follow suit, adopting cryptocurrency-friendly policies, then what kind of challenges or changes do you expect for the current financial system or the global economic structure?
There is a lot of politics in this question because it depends on what other countries are going to do. But as far as economics goes, I think the two systems will be sort of merging, I guess. So with cryptocurrency, I think there is clear demand. Not all big members of crypto industry share it, but there is clear demand that we want to have clear rules. We want to have regulations because it will be good for our business. Some crypto exchanges are still fine doing with shady individuals, but there is clear demand for that. So essentially it brings crypto world closer towards standard finance. At the same time, if you want to trade Bitcoin, you don't need to bother to figure out how to open your own crypto wallet. You don't need to worry about putting your money into crypto exchange. You can go to New York Stock Exchange and just buy funds that already trade Bitcoin. So you can do it using regular methods without learning anything about crypto. Digital central bank, digital currency, probably there is a good chance that it will be happening. So there is kind of merge of two systems. I think that's what's going to be happening.
But on the one hand, we are working on strengthening the system, but on the other hand, we have long-term concerns like cybercrime, such as cyber theft or cyber money laundering issues. This issue has been with us for a long time. So compared to the past, has there been any technological advancement in addressing more effectively than before, or will we continue to face those challenges?
I think there are two layers here. First, there is a unique type of attack that is only decentralized currency susceptible to, such as like Bitcoin. So it's called 51% attack, and the idea is that if one entity, like the government, controls 51% of the network, of computational power of the network, then it can do whatever it wants with money, with a particular currency. This type of attack is unique to decentralized cryptocurrency. It happened with Bitcoin Gold, which is not Bitcoin, but like different, it's a fork from Bitcoin. Those type of attacks happened, but they are not likely to happen with large networks, such as Bitcoin. So we don't need to worry about it. But then there are like regular attacks that essentially it's like regular cybersecurity issues. There is an asset which can be accessed, by somebody unauthorized, and that asset online, and that asset can be stolen. And it doesn't have to be only cryptocurrency. It can be like any asset. So this like North Korean hacking group, like Lazarus, whatever it's pronounced. They were not only attacking crypto exchanges. They were attacking, like Bank of Bangladesh, for example. They were attacking all kinds of like standard financial institutions for standard assets. If they can do it, they can. And so in my opinion, not being a cybersecurity expert, technology is there. In a sense that, if you have your crypto wallet, probably it's hard for me to imagine that somebody can steal it unless, you just start walking around giving everybody your password, your keys. So the founder of Bitcoin, Satoshi Nakamoto, so he has around, I want to say somewhere between 750,000 and 1 million Bitcoins in his wallets. Wow. But he hasn't been active since 2015, and nobody knows who he is. The money is there. He would be top 10 richest person in the world. So it's a lot of money. They're not stolen. Okay. They're still sitting there, you see? So I think the technology is there. The problem that crypto industry faces is that lack of organization. So they do they organize poorly, they safeguards that already exist, they don't use them, they're very uniquely susceptible to social engineering attacks, because if there is a head of security of Bank of America, can you or I just talk to him randomly? No, we cannot probably. If there is some head of some crypto exchange or some a crypto asset program, he's sitting on GitHub every day on the forum. I'm some malicious agent. I create a bunch of accounts. We start doing legit improvements, and then we're telling this guy, hey, can you check out my blog? I wrote this really great thing. He checks out my blog, and bam, his computer is infected because they're so easily available. There was another attack when people were just saying you're a loser and everything, and it completely freaked out the guy. This is something that cannot be done with head of cybersecurity of big banks. And then crypto exchanges, they just ran by essentially amateurs. And they would be do you know the FTX crypto exchange that got bankrupt in November 22? And their internal regulations were so bad. For example, there was one individual who got this completely useless crypto token and started selling it between his two accounts. So lots of trades, the price goes up. The token is completely worthless, but now it has nothing behind it, but now it went up 10,000%. So you can use this completely worthless token as collateral to take loans of something useful like Bitcoin and withdraw and make a lot of money. So the FTX people, they see doing that, and they just exchanging messages IDK, I don't know, what is this guy doing, LOL. And then later when they figure out what he's doing, oops, we forgot to block his transactions, ton emoji. And then the guy he got around 500, somewhere between 500 million and $1 billion out of that. The conclusion was he stole money from us, but we should still stay friends with him because he was 50% of our margin market. This is not cybersecurity. So my point is technology is there, the organization is lacking. So that's what's needed to be done. So I think once they sort out the organization, they will be fine.
All right. When business like hair salons or cafe began accepting cryptocurrencies, we had that kind of expectation that, oh, cryptocurrencies may replace the current traditional currency system. But the reality is different. Even Bitcoin finds it difficult to be used in a local market or even online. Why do you think there's some kind of gap between the expectation and reality?
There are several things, as always. One is, as you mentioned yourself, Bitcoin is very volatile. And that's not maybe something that merchants just simply might dislike. There are stable coins which are just pegged to, for example, US dollar, and so those coins are not susceptible to volatility. But then there is a second problem. The second problem is that Bitcoin network is very slow. So it can process like 710 transactions per second. Visa can do 1,700 transactions per second, and at peak it can do more than 60,000 transactions per second. So there is a very big difference. Just Bitcoin is very slow. So that's the second problem. And then there is also currently there is no like tax framework for merchants to know, okay, so I got this money in Bitcoins, what can I do? How do I pay taxes? This is all underdeveloped, and so I can see that many merchants would just stay away from cryptocurrency for now. Later, with like stable coins that are stable in terms of the exchange rate, and maybe they can be faster, this tax framework, it will work out, but that kind of becomes very ironic because you start with this decentralized cryptocurrency, which will be future financial system, all these great ideas, and then you kind of would end up, the practical application would be stable coin tied to US dollar with heavy tax regulations and everything. So, but that's like the only, I think, practical way to go if you want things to be applied, accepted everywhere.
All right. Well, we'll continue to see whether the cryptocurrencies will be adopted worldwide. Thank you for your insightful and also interesting analysis.
Thank you for having me here.
Before we wrap up, let's dive into the latest global cryptocurrency developments with me. On December 5th, the price of Bitcoin surpassed a historic milestone of $100,000 for the first time. This marks the seventh largest asset in the world by market capitalization. Its market cap reached $2.04 trillion, surpassing Saudi Aramco in 8th place and trailing just behind Google, which is in 6th place. As of December 6th, the total value of the global cryptocurrency market soared to $3.8 trillion, which is equivalent to France's GDP in 2023. On December 4th, at an investment conference in Moscow, President Vladimir Putin expressed a surprisingly positive stance on Bitcoin, calling it a useful asset. This marks a departure from his previous skeptical views. Facing mounting distrust among Russia's traditional elites due to the cost of the war in Ukraine and escalating sanctions, Putin appears to be leveraging Bitcoin to address critical challenges. These include Moscow's dwindling foreign reserves and increasing isolation from the US dollar-dominated financial system. On December 5th, US President-elect Donald Trump announced the appointment of David Sachs to a newly created federal position overseeing cryptocurrency and AI, the first of its kind in US history. He will be responsible for shaping cryptocurrency regulations, making this a highly significant decision. Moreover, Sachs hosted Republican fundraising events during the election, emerging as one of Trump's key supporters. This appointment is seen as a signal that Trump's second administration intends to strengthen ties with Silicon Valley figures who supported his campaign, aligning technology leadership with his policy agenda. Join us again next week for more insights and in-depth understanding of global events. Thank you sincerely to all our viewers for staying with us until the end. This has been Jina Kim for the GeoVista.